Assalamualaikum and hi, my name is Wana Farhani binti Zainuddin. My matric number is 82483793. Today, I would like to present about an introduction of our report. First of all, financial analysis statement is important management tool used to evaluate a company's financial performance, stability, and long-term prospect, and to summarize a company's financial activities, cash flow, and profitability over a specific period. Usually annually or quarterly, while in this report, we covers 3 years period from 2022 to 2024. This analysis also helps stakeholders like investors, creditors, and regulators to have a better understanding about the company's financial condition. The report also includes horizontal, vertical, and ratio analysis, and our group agreed to choose 7-Eleven Malaysia Holdings Berhad and My News Holding Berhad that is both listed on Bursa Malaysia. These companies were chosen because they are well-established convenience store operators, actively expanding, and highly relevant in Malaysia's retail industry. Next, as for business nature, 7-Eleven Malaysia Holdings Incorporated in Malaysia in 1998 as a largest convenience store chain in Malaysia. 7-Eleven also operates more than 2,400 outlets nationwide, which also serve a wide range of customer daily across urban and suburban areas and offering a daily necessities and packaged food, ready-to-eat meals and beverages, payment and convenience service. While 7's businesses also strategy also focuses on high customer traffic, accessibility, and operational efficiency. As for Minus Holding Berhad, it was established in 1999 as a Malaysian-owned company which operates over 500 outlets, mainly in urban areas. Focuses on fresh and ready-to-eat food offerings and produce food through its own food processing center. Minus also offer bakery items and beverages under Maru Cafe, and their target urbans, professionals, youth, and on-the-go consumer.
Hi, good day everyone. So today I'll be presenting about horizontal analysis for 7-Eleven Malaysia from 2022 to 2024. First of all, horizontal analysis help us to see how the company has performance changed over time. So first we're going to look at current ratio. So the current ratio has decreased from 1.21 in 2022 to 0.88 in 2024. This shows that 7-Eleven ability to pay short-term liabilities weaker over time. In 2024, the current liability were higher than the current asset, indicating liquidity pressure. Secondly, we are going to look at asset test ratio. So the asset test ratio fell from 0.89 to 0.49. This means that 7-Eleven become more dependent on inventory to settle the short-term debts. In the lower ratio shows the weaker immediate liquidity. So thirdly, we're going to look at average collection periods. So the average collection periods improved the significant from around 16 days to only 3 days in 2024. This shows that 7-Eleven collection payments from customer much faster improve cash flow. So for account receivable turnover, for receivable turnover increased sharply to 1 to 1.25 times in 2024. This means the company contribute receivable into cash more frequently, showing strong credit control. Inventory turnover decreases slightly from 5.54 to 5.03 times, indicate inventory turnover mostly show to suggest the overstocking or weaker sales demand. Then to net working capital declines from RM 215 in 2022 in the negative of RM 100,000 to 22,487 in 2024. That shows that current liability exceeds current asset, short term liquid risk. So the next is debt ratio. So debt ratio is remaining high but stable around like 86% to 89%. So this indicates the most of the 7-Eleven asset are financed by debt, increasing the financial risk. So time interest earned was like negative in 2022 and 2023, meaning the company couldn't not recover interest expenses. In 2024, it has been improved 2.15 times, showing that operations incomes was sufficiently to pay interest. Uh, Total asset turnover has like increased from 0.98 times to 1.19 times. That shows the better efficiency to using total asset to generate the sales.
Okay, next I will presenting horizontal analysis for 7-Eleven, focusing on fixed asset turnover until operating return on asset. First of all, we look the fixed asset turnover ratio, which measure how efficiently 7-Eleven use its fixed asset to generate sales. This ratio increased from 2.39 times in 2022 to 2.62 times in 2023, and then rose sharply to 5.15 times in 2024. The significant increase in 2024 indicates that 7-Eleven utilized its property, plant, and equipment much more efficiently to generate revenue. Next is the gross profit margin. The margin increased slightly from 30.35% in 2022 to 31.11% in 2023. This indicating improved cost control. However, it's declined to 26.01% in 2024, suggesting higher cost of goods sold or pricing pressure that reduce gross profitability. Moving on to the operating profit margin. The company recorded negative margin in both 2022 and 2023. It showed operating losses. However, in 2024, the margin turned positive at 2.51%, indicating improved operational efficiency and better control over operating expenses. For the next profit margin, 7-Eleven recorded losses in uh, 2022 and 2023. In 2024, the net profit margin improved to 1.3%, showing that the company successfully returned to profitability after previous losses. And the last one is operating return on asset. The operating return on asset show how efficiently the company used its asset to generate operating profit. This ratio was negative 2022 and 2023, but increased significantly to 5.80% in 2024. This indicates that 7-Eleven become much more effective in using its asset to generate operating income. Okay, next we move to horizontal analysis, my news. Uh, I will present from starting from point 1 to point 4. Okay, the first one is current ratio. For my news, the current ratio improved from 0.71 in 2022 to 0.85 in 2023. This show better short-term liquidity. However, it slightly declined to 0.84 in 2024, indicates that the company still face challenges in fully covering its short-term liability. Next, acid test ratio. The acid test ratio declined from 0.47 to 0.40 over the 3 years. This indicates weaker immediate liquidity and a higher dependence on inventory to meet short-term obligation. The next one is average collection period. The average collection period increased significantly in 2023, showing slower collection of receivable. However, it dropped sharply to 5.2 days in 2024, reflecting improved receivable management and better cash flow efficiency. The last part for my presentation is account receivable turnover. Finally, the account receivable turnover increased significantly to 70.14 times in 2024. This show that my new strengthen its credit control and convert credit sale into cash more efficiency. Uh, in conclusion, both companies show significant improvement in efficiency and profitability in 2024, although short-term liquidity remains a challenge.
Hello everyone. Today I will be presenting the horizontal analysis of my news for the period from 2022 to 2024. Firstly, inventory turnover. Inventory turnover was 7.18 times in 2022, then declined to 6.00 times in 2023, suggesting slower inventory movement. However, in 2024, it increased significantly to 9.76 times, indicating improved inventory control and faster stock turnover. Moving on to net working capital. Net working capital was negative in all 3 years. In 2022, it was negative Rm 82,590, improved slightly to negative Rm 32,180 in 2023, but worsened significantly to negative Rm 82.5 million in 2024. This shows increasing short-term liquidity pressure in 2024. For the debt ratio was 93% in 2022, then declined to 62.67% in 2023, showing reduced reliance on debt. In 2024, it increased slightly to 67.57%, indicating moderate but controlled leverage. Next is time interest earned. In 2022, the ratio was negative 1.80 times, and in 2023, it remained negative at negative 0.70 times, meaning my news could not cover interest expenses. In 2024, it improved to 2.39 times, showing the company regained its ability to service interest cost. Looking at asset efficiency, total asset turnover increased from 1.16 times in 2022 to 1.15 times in 2023 and further to 1.26 times in 2024, indicating better use of assets to generate sales over time. Fixed asset turnover was 2.43 times in 2022, declined to 1.70 times in 2023, but increased sharply to 5.26 times in 2024, showing significant improvement in fixed asset utilization. In terms of profitability, gross profit margin was 28.42% in 2022, declined to 24.48% in 2023 and increased sharply to 44.96% in 2024, reflecting strong cost control and pricing efficiency. Operating profit margin was negative 4.83% in 2022, close to break-even at 0.11% in 2023 and improved to 4.56% in 2024, showing better operational efficiency. Net profit margin was negative 5.58% in 2022, negative 1.47% in 2023, and turned positive at 1.24% in 2024, indicating recovery from losses. Lastly, operating return on assets. Operating return on assets was negative 5.60% in 2022, negative 0.12% in 2023, and increased significantly to 5.72% in 2024, indicating more effective use of assets to generate operating profits. In conclusion, while my news faced liquidity challenges throughout the 3 years, the overall performance improved significantly in 2024, especially in terms of profitability, efficiency, and financial stability. Thank you. Hello everyone. Today I will be presenting section 5.2, vertical analysis for 7-Eleven and My News for the year 2022. Firstly, current ratio. In 2022, 7-Eleven recorded a current ratio of 1.21, while My News recorded 0.71. This shows that 7-Eleven was better able to meet its short-term obligations. mainly due to higher current assets relative to current liabilities. My News lower ratio indicated tighter liquidity and higher short-term financial pressure. Next, quick ratio acid test. 7-Eleven achieved a quick ratio of 0.89 compared to My News at 0.47. This indicates that 7-Eleven had more liquid assets available without relying heavily on inventory, while My News depended more on inventory to meet short-term liabilities. Moving to average collection period, My News recorded a shorter collection period of 9.58 days compared to 7-Eleven's 16.49 days. This suggests My News had stricter credit control and faster cash collection from customers. For accounts receivable turnover, My News recorded 38.12 times higher than 7-Eleven's 22.14 times. This shows My News was more efficient in collecting receivables due to faster billing and collection processes. Next is inventory turnover. My News achieved an inventory turnover of 7.18 times, while 7-Eleven recorded 5.54 times. This indicates My News managed inventory more efficiently, possibly due to better demand forecasting and faster stock replenishment. Moving on to net working capital. In 2022, 7-Eleven recorded positive net working capital of Rm 215000, showing sufficient short-term resources. In contrast, My News recorded negative net working capital of negative Rm 82,590, indicating liquidity constraints caused by higher current liabilities than current assets. Next, debt ratio. My News recorded a higher debt ratio of 0.93 compared to 7-Eleven's 0.89. This shows My News relied more on debt financing, increasing financial risk but allowing business expansions. For time interest earned, both companies recorded negative values, with 7-Eleven at negative 0.36 times and My News at negative 1.80 times. This indicates that operating income was insufficient to cover interest expenses, especially for My News due to higher debt level and weaker operating performance. Now, total asset turnover. My News achieved 1.16 times higher than 7-Eleven's 0.98 times. This suggests My News utilized its assets more efficient to generate sales, possibly due to smaller asset base. For fixed asset turnover, My News recorded 2.43 times, slightly higher than 7-Eleven's 2.39 times. This indicates both companies used fixed asset efficiently, with My News performing marginally better. In terms of profitability, gross profit margin, 7-Eleven recorded 30.35% higher than My News at 28.42%, indicating better cost control and pricing strategy by 7-Eleven. Next, operating profit margin. Both companies recorded losses, with 7-Eleven at negative 0.80% and My News at negative 4.83%. My News lower margin reflect higher operating expenses relative to sales. For net profit margin, 7-Eleven recorded negative 0.34%, while My News recorded negative 5.58%, indicating that My News faced higher overall costs and weaker profitability. Lastly, operating return on assets. 7-Eleven recorded negative 0.78%, while My News recorded negative 5.60%. This shows both companies were inefficient. Lastly, operating return on assets. 7-Eleven recorded negative 0.78%, while My News recorded negative 5.60%. This shows both companies were inefficient in generating operating profit from assets, with My News affected by higher cost and lower margins. In conclusion, for the year 2022, 7-Eleven demonstrated stronger liquidity and profitability, while My News showed better efficiency in receivable and inventory management. However, high debt operating cost affected My News' overall financial performance. Thank you.
Okay, now I will presenting vertical analysis 2023 for the both company, which is 7-Eleven and MyNews. First, we look at the current ratio. In 2023, 7-Eleven record a current ratio of 1.16, which is higher than MyNews at 0.85. This show that 7-Eleven was in a stronger liquidity position and had sufficient current asset to cover its current liability. However, MyNews operate below the ideal benchmark of 1, indicating tighter short-term liquidity and greater reliance on efficient cash flow management. Next is the acid test ratio. In 2023, 7-Eleven record an acid test ratio of 0.84, while Menus recorded 0.42. Although both ratio are below 1, 7-Eleven show a much stronger immediate liquidity position. So minus lower ratio indicate a heavier independence on inventory sale to meet short-term obligation, increasing liquidity risk. Moving on to the average collection period. In 2023, 7-Eleven took 16.78 days to collect receivable compared to minus 18.73. This indicates that 7-Eleven was more efficient in collecting receivable, resulting in better cash flow. So, minus longer collection period suggests lower receivable management, which may put pressure on liquidity. Next, we look at account receivable turnover. Starting from in 2023, 7-Eleven recorded a higher turnover of 21.75 times compared to my news at 19.49 times. This support the earlier finding that 7-Eleven was more effective in converting credit sale into cash. Minus lower turnover indicate relatively slower receivable collection. So next, inventory turnover ratio. We examine the inventory turnover ratio in 2023. Minus achieved a higher inventory turnover, which is 6.00 times, compared to 7-Eleven, which is 5.38 times. This shows that Minus managed its inventory more efficiently, which faster stock movement and lower holding costs. Meanwhile, 7-Eleven lower turnover suggests lower inventory movement and possibly higher inventory holding. Okay, next we look at net working capital. In 2023, 7-Eleven record positive net working capital of 180,000 ringgit, indicating that the company had sufficient short-term resources to meet its obligation. In contrast, MyNews recorded negative net working capital of 23,180 ringgit, meaning current liability exceed current assets. This suggests that Manu face tighter liquidity and relief more on continuous cash inflow on short-term financing to support operation. Moving on debt ratio, in 2023, 7-Eleven record a debt ratio of 86%, which is higher than minus at 63%. This indicates that 7-Eleven rely more heavily on debt financing exposed it to higher financial risk. However, miners had a more conservative capital structure, indicating better long-term solvency. Next is the time interest and ratio. In 2023, both company record negative ratio, which 7-Eleven at negative 0.82 times and minus at negative 0.70 times. 0.70 times. This show that neither company generate sufficient operating income to fully cover interest expenses. Moving on, total asset turnover. which can indicate how efficiently a company use its total asset to generate sale. In 2023, Minus record a higher total asset turnover of 1.15 times compared to 7-Eleven at 1.10 times. This suggests that Minus utilized its asset more efficiently to generate revenue, while 7-Eleven shows slightly lower asset utilization efficiency. The last one is fixed asset turnover. We examine fixed asset turnover in 2023. 7-Eleven record a higher fixed asset turnover, which is 2.62 times compared to Minus at 1.0 times. This indicates utilize its property. This indicate that 7-Eleven utilize its property, plant and equipment more effectively to support revenue generation, while miners may have experienced an underutilization of fixed asset. Next, we move to the number 11, which is gross profit margin. In 2023, 7-Eleven record a gross profit margin of 31.11%, which is higher than Minus at 35.90%. This indicates that 7-Eleven was more effective in managing its direct costs and generating gross profit from sale. Moving to the operating profit margin, in 2023, both company record negative operating margin, which is 7-Eleven at negative 1.09% and Minus at negative 2.34%. This indicate that operating expenses exceed operating income for both company. Okay, next, net profit margin. In 2023, 7-Eleven record a net profit margin of negative 1.61%, while Minus record negative 3.12%. So both company experience net loss, but 7-Eleven perform relatively better, indicating lower overall financial strength compared to Minus. So the last one is operating return on asset. In 2023, 7-Eleven record on an operating return on asset of negative 1.21%, while Manu record negative 2.61%. They indicate that both company were unable to generate positive operating return from their asset. However, 7-Eleven show relatively better asset utilization compared to Manus. Overall, for the years 2023, 7-Eleven performed better in terms of liquidity and profitability, while many show strength in inventory and asset efficiency, although both companies face profitability challenges.
So nextly, I will compare the financial performance of 7-Eleven and MyNews for 2024. For the current ratio, 7-Eleven records 0.88, slightly higher than MyNews at 0.84. This shows that 7-Eleven has a slightly stronger short-term liquidity position. For acid test ratio, 7-Eleven acid was like 0.49 higher than MyNews 0.40, indicating better intimate liquidity. For average collection period, 7-Eleven collect receive faster than 3.01 days compared to 5.2 days from MyNews. That shows that better cash collection efficiency. So average collection period, 7-Eleven collect receivable faster at 3.01 days compared to 5.2 days for MyNews. This shows like better cash collection efficiency. Inventory turnover, MyNews performed better with 6.76 times compared to 5.03 times for 7-Eleven. This shows like MyNews sold inventory move faster. For net working capital, both company record the negative net working capital. However, 7-Eleven were difficult was smaller, indicating a relevant better short-term financial strength. For debt ratio, 7-Eleven has a higher debt ratio of 86% compared to 67.57 of Minus, meaning that 7-Eleven rely more on debt financing. Time interest earned, both companies were able to cover interest expenses in 2024. My news record 2.39 times, slightly higher than 7-Eleven, 2.15 times. Total turnover, my news record 1.26 times, slightly higher than 7-Eleven, 1.9 times, showing that more efficiency used for the assets. For fixed asset turnover, both companies shows the similar performance. My News recorded 5.26 times, while the 7-Eleven recorded 5.15 times. For gross profit margin, My News achieved a higher gross profit margin for 44.96% compared to 26.01 for 7-Eleven, showing stronger gross profitability. Operation profit margin, My News record 4.56 higher than 7-Eleven 2.15, indicating better operation efficiency. Not net profit margin, 7-Eleven record 13.1, slightly higher than minus 1.24, showing that marginal better overall profitable. For operating return on asset, both company performance similar. 7-Eleven recorded 5.80, while My News recorded 5.72%, indicating efficiency asset utilization. So in the conclusion, 7-Eleven shows the stronger liquidity and receivable efficiency, while My News performance better in inventory management and profitability. Both companies shows the financial recovery in 2024.
Assalamualaikum, my name is Nur Shazwani binti Muhammad Rashidi and my metric number was A24A3166. For my part was recommendation, so I have 5 recommendations for both the company. So the first one was improve the current assets and management and liquidity. Why? We know in this first recommendation, why we suggest is actually because both company should focus more on managing their current asset to ensure that liquidity levels remain sufficient for daily operations. Also, we know that good liquidity is important because it actually can help companies meet short-term commitments such as paying employee salaries, purchasing raw materials, and also covering operating expenses. So we know that when liquidity is well managed by the company, companies are able to operate more smoothly without facing serious cash flow pressure. So we know that some practical steps actually that can be taken include monitoring inventory regularly to avoid excess stock, managing data more efficiently to shorten collection periods, and also reviewing current asset to identify that can be converted into cash more quickly. So we know using this information technology system in cash flow management, it also can help both of company improve financials forecasting and support their management in making more accurate and strategic decisions. So for the point 2, the point 2 of recommendation is actually strengthen marketing and sales strategies. Why? Because we know these recommendations actually can help both the company can encourage to strengthen their marketing and sales strategies in order to improve overall profitability. When a higher profit margins is allow companies to expand their operations and provide a stronger financial positions to cover their liabilities and invest in productive assets. So we know that to achieve this, both our companies should conduct their market research to better understanding customer needs and also preferences. We know that implementing targeted promotion and increasing a digital marketing effort through social media and e-commerce platform is actually can help companies to attract more customers for their marketing. And at the same time, strengthening a brand image and improving customer experience are really important to retain existing customer and support long-term revenue growth. The third recommendation is actually enhance operational cost efficiency. Why? We know these third recommendations actually focuses on improving operational cost efficiency so that company expenses do not place unnecessary pressures on cash flow. And effective cost management allow companies to maintain competitive pricing while still achieving reasonable profit levels. So among the strategies that can be considered are renegotiating with the supplier to obtain better prices and providing training to improve employee productivity. So companies should also review their operational process to identify inefficiencies and reduce unnecessary costs. So introducing this automation for repetitive tasks can further enhance efficiency and helps company manage costs more effectively. And for the fourth recommendation was implement regular financials analysis. Why? On the fourth recommendation, it's actually both companies should conduct a regular financials analysis by monitoring key financial ratio such as the current ratio, quick ratio, return on an asset, and a debt to equity ratio. And all of that is actually very important to ensure that the company's financial performance remains stable. So the regular financials analysis actually help help management evaluate the effectiveness of a financial decision, identifies potential risks at an early stage, and also support a better strategic planning to the company. So with this accurate financial information, companies can make more informed decisions in both the short term and long term of the company. And the lastly points for recommendations actually strengthen long-term business sustainability. We know that actually both companies are advised to strengthen their long-term development plans to ensure business sustainability, because long-term planning is actually important because this can help companies adapt to change in economic conditions, technologies, and consumer behavior. And also, through structure and strategic planning, management also can identify the potentials of investments opportunities for the company. Also, it can encourage innovations and improve overall operational efficiency. As a result, companies can maintain stable growth and remain competitive in the long run for the company. That's it.
Assalamualaikum and hi. My name is Nur Amira Ashiki binti Muhammad Nazman and my metric number is 82483050. Today, I want to talk about advised financial activities and performance for two companies such as 7-Eleven Malaysia Company and My News Holdings Berhad Company. The first is current asset management and liquidity. This places serious focus on managing current assets to ensure liquidity levels are at an optimum level and to ensure the company's ability to meet short-term commitments, reduce cash flow pressure, and implement regular inventory monitoring, efficient debtor management, as well as the use of IT in efficient cash flow management. Secondly, strengthening marketing and sales strategies. It is said that this can reinforce marketing and sales strategy to increase profit margin and company growth, and it is necessary to explore new market through comprehensive market research and target promotion to specific segments, as well as enhancing digital presence through social media and e-commerce to strengthen the brand and new customer experience. The third is advice on efficient in operational cost management. It is said that this can help resist the structure of operational costs to improve efficiency and reduce cash flow burdens, and it enables negotiation prices with suppliers to cut expenses that do not yield significant return, as well as increasing employee productivity through training, incentive, and automation of operational process. Next, advice on implementing periodic financial analysis. This is suggested so that regular financial analysis can be carried out to monitor the company's financial performance and risk, and to assess key financial ratios such as current ratio, quick ratio, ROA, and debit to equity ratio, which can help in managing and making more precise and systematic strategy decisions. Finally, it is advised on long-term strategy planning and sustainability. This is Cost strategy planning can restructure long-term development plan to ensure the company's sustainability and competitiveness, as well as identify high potential investment opportunities and enhance product and service innovation, as it allows business strategy to adapt to a change in the global economy, technology, and consumer behavior. That's all.
And lastly, for the conclusion, the study compared the financial performance of 7-Eleven Malaysia and MyNews Holdings from 2022 to 2024. Both companies operate in a highly competitive convenience retail market, while 7-Eleven shows stronger performance in liquidity management, receivable efficiency, and MyNews demonstrates a better profit margins, inventory management, while both companies show a financial improvement in 2024. Continuous also focuses on cost control and working capital management that is very important for long-term sustainability. That's all from our group. Thank you.